Hello and welcome. Chart Request Live. Today is Tuesday. We do this show twice a week, 1 o'clock Eastern Time, right here on Stock Market TV. You bring your ticker requests. We'll bring the charts. Patrick is on the charts today. How you doing, Pat?
I'm doing fantastic. How are you?
So it felt like a long weekend. Maybe it wasn't a long weekend. We had one of these funky weeks, right, with a 4th of July, midweek, Friday. Nobody was paying attention. Trust me, no one was working.
Yeah, there were about three people trading on Friday, right?
Yeah, I I don't know how many times I golfed last week, but we're back now. We are so back. Still not a top in the cryptos. Still not a top in the home builders. The banks are ripping. I think they like the Powell. Tech is good, but that's just like any other day.
Yep.
What are
Business
you
as
looking
usual
at?
there.
What is the chart to watch right now?
I gotta say, as bullish and upbeat as everything is, the thing that I would say is most concerning right now, it's a couple things. It's not really concerning. I mean, if anything, we should be happy, but we're meeting our upside objective here. We're getting pretty close to that 161 extension, not just on the S&P 500 here, but also on the Qs. Um, we can do the same thing here. We're there. We reached where we needed to. It's been an incredible rally. I remember when we first broke out looking at that 500 thing, and it seemed really far away. 500, is NASDAQ really going to go up to 500 in the next year or so? But here we are. So I think this is, it's been an incredible run. First half of July is great. We're seeing that play out. We're up 6 days in a row now on the S&P. It's been a steady bleed higher. So I think we're probably at a logical point where we're due for some consolidation at the very least. I don't want to say correction or pullback, but that could absolutely happen too.
No, but targets are being hit, right?
Yep.
So what is your time frame? It also makes me think of, Brian Shannonism, which is where did we come from?
Absolutely. Yeah. Yeah.
Look
And
at
where
the
did we
chart.
come from, right? Like
Yeah.
this has been an incredible rally, a very unusually strong rally. So at this point, to really step on the gas pedal here, I think is not the best idea here. And also, you look at the groups that led us here. Semis, same thing, reaching their extension. Now, they had reached their 161 extension where the S&P is. They reached that a while ago, and of course, they ripped right through it. But you did still see some action around that level. And I think you'll probably see something similar in the broader market. And then not just SMH on its own, but also if you look at it on a relative basis, here we are again
Wow.
at that logical point. So
Zoom out. Zoom
yeah,
out.
when I see things like semis reaching their upside objective on an absolute and relative basis, you got to say it's been an awesome rally, but maybe not. Maybe now is not the time to get aggressively bullish if you haven't been up until this point.
Well, so get aggressively bullish, right? What does that mean? I'm always thinking about, is it a good time to make new entries, right? Is
Yeah,
this an environment where I want to enter new trades? All of the charts that you just showed me are mega cap growth. But then
true,
if you pull up something like XLE, that's a multi-year range in the context of a nice uptrend.
true.
So I think there are opportunities, but maybe not in the places where there were opportunities last month or the month before. Maybe you want to be taking a little bit of profits in those trades and then sprinkling some love into maybe some potential sector rotation candidates. So
Absolutely. And I will say in the last few weeks or the last week or so, some old themes have popped up and are actually shaping up and looking better, like gold and silver, right? I mean, more so
yes,
silver, but silver,
love
it's been correcting these past 2 months. Everyone was super excited about it 2 months ago. Then it corrected about 11% or so. I mean, that's very healthy, normal correction.
yeah.
And here we are. That multi-year breakout's totally on the table. So to your point, I mean, there is still plenty of opportunities out there. It's just maybe they're not in the ones that are the most apparent right now. Maybe we do see some rotation, right?
I think you're right. time to think outside the box, and maybe some other areas that haven't participated as much start participating. And those are where the good entries are right now. Because in a bull market, the bad ones tend to catch up to the good ones. Right? All right.
Yeah.
Hit the chat because this is right on theme with what we're talking about. Go to Jeffrey.
I do think energy is probably a good choice though. Like not to dwell too much. I know we got to get to them, but like Valero, I was looking at that one yesterday. At a very logical level. You got the breakout earlier this year. You hit the target, and here we are. Classic retest here. So there's plenty of opportunities out there. It's just maybe not in the ones that are maybe not mega cap tech, although that certainly has been the bet.
How about today's candle? If Valero rips back and reclaims this level on a candle that looks the way it does today, zoom way into that candle. I don't know what happened. Let me try and find out real quick.
Support happened.
Yeah, support.
But you're absolutely right. I mean, we opened way down here, and here we are pushing. We're almost at, I mean, we're at the highs of the days pretty much.
You're right, Pat. This is just what energy looks like today. XLE looks the same way. I
Oh,
love
really?
that candle's shaping up if it closes that way, and you can catch ones that are reclaiming support or resistance levels, like in the case of Valero. Then you get the squeeze dynamic, right? Where shorts pile in this morning on something that looks like a clean break, looks like we're violating the 200-day moving average, right? And then we all of a sudden blast higher, and you have this clean, clear level going back to the first half of 2022 to define your risk at. That's a pretty chart, Pat. That's interesting.
Yeah. You seen this, right, Crack?
Well, Powell came out today, and I don't know what was said because I missed it. We were on air, but he put a bid in all the cyclical stuff, right? So go to Jeffries next, but why don't you start it off with XLF, right? Like look at the candle in financials today.
Wow, this is beautiful, isn't it?
Powell gave them what they wanted this morning, is what this price action's telling me.
Yeah, and what I like about this one is you already kind of got the messy consolidation here. You got the breakout, didn't work out as well as people might think or as much as you want on a breakout, but you have this healthy consolidation. It was a failed breakout technically, but you didn't see that sharp reaction lower. And I think that's information right there. The fact that it corrected through time rather than price it speaks to the underlying bid. And I think this one is probably ready to work higher here. I mean, you see this little consolidation here. This is just perfect.
This would be one of those areas we mentioned: energy, precious metals, financials.
Yep.
This is a rotation candidate.
Absolutely.
I think this could be the best group in the back half of the year, Pat.
Well, so it's been one of the best halves, or one of the best groups in the front half, right? Or
no, it's been sideways mostly. I mean, January and February were good, but it's been sideways for the last 4 months.
Yeah.
Like tech, straight line higher.
Yeah, you're right. So with XLF, yeah, I mean, definitely a pond we want to be fishing in here. I mean, if it closed here, it would be probably what, like the 5th highest close of all time. So it really hasn't broken down. If anything, it's looking ready to head higher. And Jeffries, beautiful, beautiful setup within there. I already have this one marked up, but you resolved out of this ascending triangle here, very bullish pattern. Here we are, probably working towards the target at this point. Yeah, we're getting there. We're getting awfully close. I'd say 53.50 is your target. So here we are at 51.70.
I think Jeffries, you're probably already in it if you're asking about it, right?
Right.
And not far from the target. Another one in the chat, Joe T, Goldman Sachs, GS broke out today. I think you want to be buying ones that look more like this one.
Yeah, absolutely. This one, and great suggestion here. I mean, this is a great alternative to Jeffries. Jeffries looks amazing. You and I have both loved that stock or that setup for a while, but it's playing out, right? And like you said, do you want to enter long Jeffries here? Oops. When it looks like this and it's approaching its target and it's been up for 5 weeks in a row or 4 weeks, or do you want to buy something like Goldman Sachs that is just coming out of a 1 month consolidation here, 2 month consolidation?
Yeah.
That's a nice little flag, isn't it?
Breaking out from a coil. The time to be buying Jeffries was against those prior cycle highs a few weeks back.
Yeah, but I think you're spot on with the suggestion for Goldman Sachs here.
We
Nice.
put leaps on Morgan Stanley. If you guys are interested in the banks, we talked all about the financials and how much we love them, particularly the big six money center banks, on the Flow Show this week. So you can go back and probably find that in the YouTube playlist. We're going to move right on. I'm trying to keep it on theme and do like one sector at a time.
Well, so I think I might even like this one more than Goldman Sachs, Morgan Stanley. What do you think?
Well, zoom out. The more you zoom out, the more you like it.
Yeah.
No, just
Okay. All right. I see what
Oh.
you're saying there. Wow.
So, just like I was saying before, home builders right now are a prime risk reversal pattern. This is a leaps pattern. Like, we're so lucky to have Sean. We have an options expert where I can say, Sean, this pattern, the way it typically works is it could take a while to leave the station, right? Big bases, false starts, sloppy action coming out of them. But once that reaction leg really kicks off, you get a massive move.
Yeah.
Almost
and
every
a
time.
multi-year move that makes it impossible to get in at that point.
Yeah, but it's sloppy. You really need to zoom out, and you also need to make your trade setup in a way that you're not worried about the day to day, right? So we went out, we're giving it 18 months, 105 calls, January of 26.
On Morgan Stanley?
Yeah. And
Wow.
they cost like $1,000 to put on. But if you think about it, we put them on when we were trading around like 98, 99 the other day. Now we're at 102. We're $3 out of the money.
It's almost like financials are having the same moment that tech had when it reclaimed the dot-com bubble highs. I don't know if it's going to play out the same way. It would be awesome if it did, but
I agree.
you know what I mean? Like they're reclaiming a major bubble high or a crisis high like that. And that set up tech for this multi-year run that we're seeing now, right? So who knows? Maybe we'll be talking about financials as the just persistent leader in 2 years from now.
What you're saying is there are a ton of big bases, multi-decade bases, all breaking out, resolving higher at the same time. This is like semiconductors 5 years ago.
Right.
People be like, oh, well, no, semiconductors just got hot. It's because of AI. No, semiconductor stocks broke out of massive bases, dot-com bubble bases.
Years ago.
Yeah, years ago. Long before anybody was talking about AI, the charts told us, lean on semis. This is leadership.
Yeah.
What was that, 2017, 2016?
It was kind of a mess. Like it really kind of came out late 2017 and then
COVID.
Didn't really decisively break until 2019. So it was like a 2-year mess. But that's a great point with financials here is we could see a really messy resolution. It could take 2 years to really decisively break those 2008 highs. But when they do, here we are talking about AI and all this.
And I think, and I also think there are tailwinds. I don't speculate, and it's not a part of my thesis, but I do think there's a big deregulation coming that favors the big money center banks as opposed to the regionals. Because what happened after the financial crisis and the Dodd-Frank legislation is that Morgan Stanley, Goldman Sachs, Bank of America, Wells Fargo, Citigroup, they're all treated just like, I don't know, Silvergate or Signature Bank, or what was the one that went away from the West Coast? First Republic.
First Republic, yeah.
Right. They're all regulated the same way. But you have the big banks, the money center banks, that are just like, these guys are cash cows. They're cash flow machines, and they want to return that capital to shareholders. They want to juice their buyback programs, and they want to pay bigger dividends. But they have to go through these stress test, bullshit regulations. And there's so much red tape that they're really not allowed to operate like a business that is in as good shape as they are should be able to operate. The regional banks deserve that sort of regulation, especially right now, especially after what happened last year. They have balance sheet problems, but the big banks are very different. So I think the market's starting to price in some sort of deregulation for the big guys, and that makes sense. And it's something that people within the industry have been calling for a long time. And maybe that happens in the coming years, and maybe that's the catalyst, right? That's
Right.
the point. Is the chart's going to move before the catalyst? Almost every time. Just like semiconductors broke out in 2017. Now it's like, oh, so obvious. Of course, semiconductors, right? But the price action was there a long time ago. Let's flip it to Lemonade. Kind of keeping it financials, but kind of moving towards tech. I'm kind of going from, we are a top-down shop, but I'm going bottoms up today.
Yeah, it really seems like some of these fintech
Chat.
stocks have caught a bid these last few weeks. Are you seeing that too?
This is a heavily shorted name. This is a squeezy baby.
This one's a mess, I gotta say. It's not a clean chart, but
Yeah.
it's trying. It's definitely trying here, right?
Well, you're going to need to zoom in because we had a band squeeze all year, a hard shake, and now a big stick out of it. Okay.
Ooh.
Yeah. Look at this. So look at that volatility contracting there. And then we whip lower, shake higher. And are we going now?
Yeah, I mean, this definitely does look like a squeezy name, like a heavily shorted name, because you have these weird little like spritz where it just kind of surges and then kind of just falls back down to earth, almost like the VIX or something, right?
They pop it. Look at GameStop.
Yeah, yeah. I think for if you're long this one, you got to look at 23 as a place to take profits. And I definitely wouldn't want to be long below 14. Honestly, probably wouldn't want to even be long below like 16. But it'd be hard to put your stop there because of all this chop. But
one out of every 3 outstanding shares is held short.
Really?
So if this one starts going, it can probably really get going.
Yeah.
Massive.
Yeah, there's your catalyst right there. I mean, that's a heavy short interest. What, you're saying like 30% or something like that?
33% short interest.
Whoa. Yeah.
Yeah. So
what I would, even with that short interest, I'd still like to see it go like over 25 here. If you get those two things, if you have that heavily shorted, if you have that heavy short interest, if and when it does break out, that would be really nice, but maybe that's asking too much.
So there's 17 million shares held short. You know, today we've traded 2 million shares. Yesterday we traded about 2 million shares. That takes 8 days to cover. And that's what we find is really the better data in terms of short interest statistics. It's not how big is the short interest. It's if that short interest were being covered with every transaction that's made, how long would it take based on normal volume, right? So if you're trading 2 million shares a day, but you have a short interest that's 17 million, that takes a week and a half, almost 2 weeks to cover. If every trade is a short buying shares to cover.
Yeah.
And that's how squeezes happen. And that's how squeezes persist. So I really like this one. Maybe the base shapes up. We get some squeeze into the upper bounds. I think that would be my target. What, 31?
Yeah. I think you're going to see a lot of backing and filling, but I think ultimately this thing's trying to reverse. It's going to be a slow process, but it's definitely trying here. It looks like it's moving in the right direction. Like I said, I'd like to see it above 25, above this 31, this 38.2 retracement, even better. But it might need some time before it gets there. Beautiful week so far, though. 11% gain. Wow. Neat.
Let's move it to Jonathan Curve. He wants a weekly chart. That's CURV. Nice base. Break above $8. Looks like a test of 1350. And he's talking about the 38% retracement dropped from high to low.
Yeah, I mean, yeah, this one's definitely shaping up nicely. I'll flip it to a daily soon, but just want to look at the overall trend here.
So this would go into that theme of a very mixed retail sector.
Horrid Holdings, what do they do?
This one keeps popping up. I think this one's a heavy short interest too.
Oh, yeah?
I'll check while you chart. We were just
Yeah,
talking
looks
about
like
this one the other day.
shaping up in a few different time frames here. I don't know if he was buying this breakout here.
Yeah, so this is another freshly squeezed name. No, so he cited the 38% retracement around 13.
Okay. Yeah, that makes sense.
You've drawn a lot of lines.
I,
Yeah,
I know, sorry about that.
the base is in. If we're above those, what is that, December pivot highs?
Yeah, I'd say above 7, it looks good. 7, yeah, I don't think 13 is out of the question. I think that's probably the next logical point here. And you also had, it's the lows from October 21 here. Yeah, that's probably the next upside target. If it's above 17, or I'm sorry, if it's above 7, gets you to 13, maybe even 14 there. Well, that's nice. I mean, that's a double.
So you should know about this one. San Jose, California.
What's that?
San Jose, California. The firm products include tops, denim, dresses.
I'm telling you, man, what is up with these denim stocks? They've just been incredible.
Huh.
This was it didn't work out now, but this move from here to here was beautiful. Here you got the failed breakout, and of course,
Levi.
nasty reaction. Levi, yeah.
Caleb was talking about Abercrombie today on Spaces. Go check
Yep.
out Spaces. We record them every Tuesday.
Yep. That was a fun Spaces today. I mean, they're always fun, but that was a good one.
Yeah. So Pat and I decided we're going to do Spaces for an hour and a half instead of an hour every week, because they are a lot of fun, and we love talking markets. And we deserve to have an hour and a half reserved every week to just talk markets, and that's what that is. It's lovely. So go check it out. Levi. So they're all correcting really hard. I don't know what happened. How does Abercrombie look?
What is that? ANF, right? Wow, look at that. Consolidating nicely. Very tight here. And we're always talking about what happens when you break out of these multi-year or multi-decade bases. And Abercrombie's a great example of that, where, now we're looking at this thing being like, how do we get in? How do we get into this uptrend? Because it's just so persistent, so steady. But I think the secret is kind of, you got to be in beforehand, and sit through some pain before you get that gain. So
having a longer time frame is a luxury, right?
Yes.
It allows you to participate in a successful way in the best patterns. These are some of the most reliable patterns. The bigger the base, the higher in space, right? The longer duration the base, the more reliable, but the breakout can take time. So if you have the luxury of having a 1 year, or God forbid, 2-3 year time frame, right, where you can scale into something as a base is shaping up. I'm thinking of Micron right now, where you could scale in, just slowly work into it, and just have the confidence that that pattern eventually completes, and this is a valid monster, .com bubble-based breakout, and you'll get a big reaction higher. You would have gotten into Micron probably 50-60% ago. But it might have taken a year because you might have entered in 2021.
Right.
So
I mean, the setup was beautiful then, but to your point, it took another 2 years and a bear market before this thing really got moving.
So that's Warren Buffett's secret, right? That's some of the best investors' secret of all time. If you talk to a guy like Jerry Parker, he'll tell you, we've actually extended our time frame for our entries and our exits, right? Because when you make your time frame longer, you're more likely to win if you're following the trend.
In fact, I do remember asking him, like, what's one thing that's changed about your process over the years? And that was pretty much the only thing he said, because, he is a pure trend follower, and, don't tweak it too much, because the essence of trend following is what makes it so great. But he did say that over time he has lengthened his breakout period that he's looking for.
I just love what they do over there. And that base reminds me of Morgan Stanley. The next one, I think the pet theme is really heating up right now. So Fresh Pet, FRPT. This is one of the real. This is a real junky one, Pat. But I think this is the right.
You call it junky, but man, this looks better than Chewy.
Look, there's a time and a place for everything. And you're right. This one's been working for a long time now. Wow. I think we use this. Let me check this out.
You guys get this at home or?
So we use the big crystal cat litter.
Okay.
I think that's fresh pet. Let's see. Dog food, fresh food. No, it's organic food, apparently. Oh, this is that food that like literally humans can eat. You ever
Yeah.
see those commercials where
Yeah,
make
I've seen
you
the
feel bad?
commercials. Yeah.
They make you feel bad for feeding your dogs dog food,
You nailed it. You nailed it.
guys. Wow.
So this one, I mean, if it holds this 129, you're looking at all-time highs at 187 next. So call it 130. Above 130 gets you to 187. Working in the right direction, and like I said, better than Chewy here.
Dude.
Chewy had that nice little move, but here we are back in the downtrend here. I don't love that. We broke out. That was awesome, but we couldn't hold that. And if we get below this 23, then it's back to the graveyard for Chewy.
I mean, listen, just leave it to Snoring Kitty to ruin a good thing.
What else we got? Looks like the chat is busy.
CrowdStrike. Listen, the time to get into CrowdStrike was, like we say on every one of these charts, at the prior cycle highs. Now, I think it's tradable. But if you're looking for like a long-term entry, yeah, it gave you a gift.
Right.
Twice.
Right. And so if you're asking about this one, then I hope you're already long, and I hope you're looking for a target, which pretty clear cut. I'd say 425 is a great target. Even if you're a long-term holder, maybe take some profits there, move up your stop, something like that. Probably a place to consolidate there. But to Steve's point, I mean, there's so many charts out there that look like this one did back in January before it broke out. So to be looking at one that's already worked out so well, and that's like, what, 3% away from its target or something,
Okay. It's a time frame issue. So obviously agree with everything you're saying. He said it's been sideways for a month, which makes me think we need to zoom into a daily. He's trying to trade this little bull flag, which I'm totally into, right? So if you're looking for a quick hit, 5, 10, 15% out of this bull flag all day, the question then becomes, do you target the 161.8 or do you measure out the flag? Like, what would you do there? That's what I would be asking myself if I were trying to trade this one out of this coil.
Yeah, that's a tough one. I think I'd still be using this. And also, I mean, when you say measure out the base, you're looking.
It gives you like 460 though. It gives you a loftier target.
Yeah, and you're using the rally into the flag as like your measuring point.
Yeah, just that flagpole. I'm just doing napkin math here, like 300. It looks like the 380. I would use that. Yeah, I would use that automatic advance because that was fierce. I mean, look at that. That's when it got added to the S&P 500.
Oh, is that what happened?
Yeah, and it just went berserk. Which is one of the best catalysts of all time. Like it happened to Uber last year. I think it happens to Coinbase next. Palantir is an obvious target to get added to the S&P 500. But what a catalyst. Like whenever they add these stocks, and it makes sense, right? Because this is what people buy most of the time. The SPY and everything else. So the biggest stocks tend to get the most flows.
I saw someone mention the other day, Tesla is now just getting back to where it got added into the S&P 500. So I thought that was kind of interesting. They got added. I can't remember when they got added, but here we are just now breaking even on that. So
you mentioned how it was a great spaces. One of the things that we discussed was I was trying to explain the difference in the world today in terms of markets and businesses where Tesla was left out of the S&P 500 forever because they have old rules. Like things changed 20 years ago where companies would come public and be big companies with giant market caps, but still not be profitable. The S&P 500, and a lot of times it works for good, of course, but sometimes it works for bad. In the case of a Tesla or Amazon was the same way, many, many cycles ago, where they don't get added to the S&P 500 simply because they don't meet the profitability requirement.
Right. But a company like Amazon back then wasn't even worried about being profitable, right? They weren't thinking about that at all.
And fun fact, people are always wondering, like, what's the difference between the S&P global indexes and the Russell 2000 the Russell indexes? The Russell doesn't have that. It's pretty much pure market cap, right? So the Russell's take is we let the market decide. If the market cap puts it in our index, we take it. The S&P 500 overlays fundamental filters, right? Before they add stocks. So it's really interesting. This is the way the indexes are devised. And this is important, Patrick, because this is what the majority of people own. If you're in the SPY, right, then it's important that you know this. You didn't own Tesla for a very long time. Because if you were in IWB, Russell 1000, you had it years before. I'm not saying pick one over the other, but they are different.
I actually didn't know that about the index classification there.
Yeah, I mean, no standards over here at the Russell. No bar.
We'll take it.
No, but I'm joking. I'm being coy. I love these guys, and I think that's actually the smarter approach.
Yeah.
Let the market do the work. The market's smarter than anybody.
Yeah.
Anyway, back to Tesla. Sorry for my rant, but
were we on Tesla?
I think you were.
I just pulled up Tesla just because we were looking at it, but man, look at this thing. I don't know if this is a squeeze going on, but looks like this thing's been up 9 days in a row, something like that. At this point, I think you're looking for 300. 300 is where this party probably ends, or at least pauses for a little bit. All right, I don't think the party's going to end. I think it goes back to all-time highs here. I mean, this thing has been consolidating since 2021. And with Tesla, if you're not in it when it breaks out, I mean, look at this massive consolidation between 2013 and 2020. I mean, that was grueling. And then you only get the breakout for like a year, and if you're not long before that during the consolidation phase, then you kind of miss out, and it's a lot harder to buy that massive uptrend. But yeah, with Tesla, looks like 300 is next.
Listen, we just got a great question in the chat. Can you pull up volume on your chart? Is that possible?
Sure, yeah.
So Jonathan, he's asking about the short ratio, also known as we call it the days to cover ratio, which is, again, what I just described. How many days, if all of these shorts are covering, and that's all the volume, how long does it take for that short interest, whatever it is, to go away? So he said, I just checked for curve 25.7. Is that right? Jonathan, it doesn't sound right because that's wild. It does happen, but we're gonna figure it out right here. I'm gonna look up how many shares are held short. I'm gonna get out my handy dandy calculator.
For Tesla?
CURV curve.
Oh, sorry.
You're gonna pull up the curve chart. You're gonna throw volume on there with a moving average, which you have.
20-day moving average is about 370.
So I like to use the 20-day.
20-day average volume?
Yeah, is that what you have?
Yeah, 373,000.
A lot of data providers will quote it as the 50-day, which is fine, right? There's no perfect way to do this. There's no perfect way to do any of this ever. But when shorts start covering and volume pours in and spikes, it can look a lot different, 4, 5, 10 times the average volume. So I want shorter volume, right? That way, when the squeeze begins, that days to cover ratio comes down and doesn't look as extreme. Does that make sense, Pat?
Yeah, absolutely.
So Curve, Torrid Holdings, apparently an online retailer from Patrick's backyard, but he's never heard of it.
So you're saying you like to see lower average volume on these short squeeze candidates?
Yeah.
Okay.
Yes. Because then when that volume pours in and that squeezes on, you get 20, 30, 40% up days.
I see. Yeah.
Those are those squeezers. There's no volume, and then all of a sudden it explodes. You could see where volume came in back in 2022. So you said the average is what?
373,000.
Okay. So Patrick just read out the 20-day average volume. I'm looking at the total short interest, the total amount of outstanding shares that are held short. It's at 1.86 million. So all you do to figure out the days to cover is you take the 1.86 million. So 373K.
Okay.
I'm getting 5 days to cover, right? So 1.8 million shares short, 370,000 shares a day.
Sounds
Takes
about right.
5 days to cover. So that's how you do that, Jonathan. But really easy to do at home. Just go and find that total short interest, and then lay a moving average on your volume on your chart. Check what that comes in at, and then you divide one by the other, and that's it. But great question. I love that. Let's just finish the chat quick. Spend very little time on this because we covered it on the morning show today, but this is from Mark. Corning Glassware.
Ooh, GLW. Talk about my backyard.
So
This
Patrick,
was in my backyard growing up.
upstate New York guy, probably, in my opinion, the best museum in upstate New York.
Yeah.
Fantastic museum. A lot of fun. Definitely check it out. How far is that from Syracuse?
It's about an hour and a half, I'd say.
Yeah. So GLW, I think, stands for glassware. Right?
Yeah. Yeah, this one, it's funny. This one got going, I think it was in 2013 too. They provided the glass for the iPhones.
iPods.
Yeah, something like that. It was the Gorilla Glass.
Well,
and I remember this thing ripped.
They still do it.
They still do
all
it?
the Apple products. Yeah.
Oh, really? Wow.
And TVs. They make the
Wow.
screens on our TVs and microwaves and all that.
Wow. But yeah, fantastic week this week. 17%. What is that? Best week since 2022. Nice. This one, I mean, these charts can shape up so quick. Something can go from looking like, oh, it needs some more time, to like, oh, where this base is completely formed and ready to go. And this is one of those where pretty much in a few weeks it just shaped up completely. But if you get above 46, I'd want to buy the breakout above 46. I'd probably jump it a little bit and get involved at 45. I think that's probably good enough.
I would buy weakness back to 38.50, right? If you had a longer time frame, because when you zoom out on this one, this chart's just so good for so long, right?
Yeah.
It's one of those where I feel like just kind of pick your spot. Also, they made a big move from what I hear today. So they're an AI stock now.
They're an AI. I was thinking about this yesterday. If even utility stocks are AI stocks now, like, isn't this narrative just getting a little out of control at this point?
But Pat, it's just starting. Like, this is nothing.
You think so?
Wait until Nextera changes their name to Next AI, right? Like, that's when you know it's over. When every new IPO is something like something.com, like it was in the late 90s, 2000. Like, we're not close.
No, and this sort of theme does have the potential to get real loony before it ends.
Yes. You know? And there are profits to justify it from AI leaders like NVIDIA and Broadcom, et cetera, right? So if you can start to show a little bit of profit or some sort of new revenue stream with a growth multiple that's far different from your ordinary growth rate, you're going to get bid up. You're going to get re-rated. You might be a 15x price to earnings stock your whole life, but you said AI on this earnings call and backed it up with some sort of new revenue stream because you're selling fiber optic cables to somebody who does an AI thing, right? Then now you trade at 25 times. That's the market that we're in. And I think, like you're saying, we get far more in than we are today in the future.
Yeah.
All right. What's next? Now we're hitting the chat. Chat, talk to me. We got a lot of catching up to do.
We got a lot.
Jonathan,
I saw some people asking about the miners in there. Should we take a look at those?
Oh, we're gonna get there. All right, let's stick with AI stocks, CEG, right? So Patrick has a problem apparently with utilities being AI plays.
I do.
This one, if you've made money in it, you don't have to give it back because Patrick doesn't believe it. You get to keep that money. Okay. So should they buy the puts or sell everything? What do you do?
I just think I think narratives can be really seductive, and I think you got to be careful if this narrative starts to spin out of control a little bit. And I feel like if we're at the point where we're calling utility stocks and glass stocks AI stocks, at what point do we just say it's a bull market? Buy everything. You know what I mean? Like,
Yeah. Okay. Correlations spike towards one at the end of bull market. You're absolutely right. But that's not where we are right now. You know that breadth is narrow. Participation has been very thin. The market is simply rewarding the ones that they believe are telling the truth about their AI future. And we're technicians, right? Which makes this all the more easier, I guess, or more fun. Like we can enjoy cycles like this. We have no extra work to do as technicians, right? The fundamental people are going crazy. They're like, well, what kind of a price to sales multiple do I put on an AI stock? And they don't know the answer because there isn't an answer.
right.
Like they have impossible jobs.
Yeah,
But we can look at something like this, Pat, and say, yeah, it might be crazy. It's like an electrical utility that's now converted into an AI stock. But I mean, goddamn.
So what is even the angle here? Like how is this an AI play?
Aren't they powering like the data centers?
Oh, are they?
Simple
Okay.
as that? Yeah. So think about
beautiful
it.
chart though. I mean, looks ready to go. Kind of looks like one of those tops that's not a top here. Kind of. I mean, not perfect, but yeah.
So this is a whole theme in outfitting the infrastructure to do AI, right? You obviously need electricity. If you think about AI, it's an NVIDIA chip. I have an NVIDIA chip in my box here, which is little with a fan on it, and sometimes it makes noises, right? So if you're going to do AI at scale, you get the GP100 or GPU100, whatever it is, the NVIDIA chip, and then you need some sort of giant data center. And then what else do you obviously need? Electricity, right? So I think it makes sense that some utilities would win. Some REITs are winning too.
Yeah.
The REITs who own the buildings are winning too for the data centers.
Yeah.
And then we're seeing it also in anybody who makes a component for any of these chips, right? So like there's this whole situation of ancillary AI plays where we don't know if it's real or not, but the market probably knows, and it seems like they're pricing in a big future for this one. What's the other?
And this seems like the logical stage where people would go look for those plays, right? You know, like we finally established AI is a thing, and then you go look for those plays that people haven't, the non-obvious ones, like those the ancillary ones. Is that how you described them?
Picks and shovels.
Yeah.
So the other one, Pat, in this space, I think is Vistra, VST. Yeah.
Vistra. Wow, looks very similar. Yeah. So this is a utility as well?
Yeah. So these have been donned as the AI utilities.
Wow, look at that.
Yeah.
Incredible.
And then let's do one more. So then for solar.
Yeah.
Maybe we could use solar energy to power these things, is what some of the analysts are saying, right? So these stocks are popping up across industry groups. Like we just did a fun little exercise. We're like, hey, you could find AI stocks in utilities. You could also find AI stocks in solar energy, right? Like who knew?
Right.
Again, is it going to end up being true when we look back 5 or 10 years? We don't know, but you can make money on it now.
Yeah, right. What's interesting about for solar is a lot of these solar names are classified as semis too, which is really interesting. So with some of those solars, you potentially have two different things working for you there.
HubSpot.
But, I mean, the stocks are still dog shit.
HubSpot. HubSpot.
Hubs.
I think it's a good way to own Google in the future. But that's really where I'm at on this one.
You think Google's going to buy HubSpot, don't you?
Yeah.
Yeah.
I think they'd be foolish not to. Now, does that end up being opportunity cost is the question, right?
Yeah.
What do they pay for it? I don't know.
Yeah.
You got a clear level there though, no?
Yeah, clear level. I'd be buying weakness back to this 540 level, but I wouldn't let it get too much further than that. I'd start to get worried if it got below like 525. It does look like it wants to retest that level. Let's zoom in a little bit. This kind of looks like a topish formation, but as Steve has pounded the table on recently, in bull markets, tops shouldn't be tops. Tops should resolve higher. So yes, this looks toppy, but that doesn't mean it'll act like a top.
And when tops start being tops in bull markets, you know that they're coming to an end. Like
Right.
if this ends up being a valid top in home builders right now, we're probably, we're in the back half of this thing,
Yeah.
right?
And,
This is
and
not,
just like in bear markets, bullish patterns fail.
Yeah.
In bull markets, bearish patterns should fail. But to your point,
have-
if
we
the
have all,
homies
we have
the
all
homies
these
break, it's
we
ugly.
have all these like stupid sayings, Pat, but they ring so true and
Yeah.
they're so simple but so good. So like my mentors told me over the years, in bull markets, laggards catch up to leaders. In bear markets, the leaders catch down to the laggards, right? It's like obviously, right?
Right. It sounds so intuitive. Yeah.
So that's that's HubSpot right now. That's home builders. It's been a laggard this year. It's been, look at this thing, straight sideways.
Yeah.
So,
Especially on a relative basis. I mean, this is not one of the stronger names.
Rachel asks a good question as always. Why not just own Google then? The question is, what do they buy them for, right? Because if you could buy HubSpot here at, what's it trading for? Whatever it is, right? And Google is a 50%. Yeah, so you buy HubSpot at 500. A lot of times that buyout price will be at the prior cycle highs because shareholders want to get back to where they were, right? We anchor to, I remember in 2021, our stock was worth this, right? And the board wants that price, and Google finally says, fine, we'll give you 870, right? So then at that point, HubSpot rallies by what? What would that be? 70%?
From here, yeah, probably 50, over 50.
More than 50% from the current price. Does Google return you 50% over that time frame? We don't know, but that's the question to ask, right? So if I'm saying HubSpot turns into Google shares in the future, is Google going to give you 50%?
That's a great breakdown. Yeah.
That's how you would think about that, right? Typically, the acquiree, which would be HubSpot in this situation, would give you more beta or more upside. That's why they're being acquired, because they're undervalued.
And Steve, look at this. Another mega cap that's reaching its price objective here. Another one.
Targets are being hit. Don't throw out your tech stocks. Depending on your time frame, right? You want to do certain things or different things with these positions, but it's time to look elsewhere for new opportunities.
Yeah.
The run's been good. And Pat, guess what? The catch-up trade also happened too. Throw up software. Like we came on this show a couple weeks ago, maybe even a month or two ago by now, and we were pounding the table. Hey, software is going to catch up here. Software looked like a top back then.
Yep.
Now look at it. There's a ton of supply here.
Yeah. I mean, that was a textbook failed top, that software one. And it wasn't just software. I mean, you pointed it out. It was cybersecurity, cloud computing. You look at something like Sky, right? The cloud computing ETF. This one looks like it could go any day now.
That one, I think you could still get involved in. There's more up there.
Would you rather be in Sky right now or IGV?
Sky. I would have been in IGV all day 4 or 5 weeks ago, betting on the failed top, and I was, right? I'm out of that trade now. I still own my software stocks that I'm gonna own, right? ServiceNow, Microsoft, Palo Alto. Of course, you don't change that. The long-term one's CrowdStrike. But that trade that you made betting on the failed top, it's completed now. That was a trade. Right?
Yeah.
So it's always
you were trading it back to all-time highs.
Yeah, you're betting failed top, automatic reaction higher, but it's still in a range. How long does it take to now get above these prior cycle highs? I don't know. Super Micro, that's a good one on this theme. SMCI, I think, is a fresh one. This is coiled. This keeps popping up in our on our Bollinger Band scan. You see that volatility really contracting.
And if this was a top, I feel like it would have broken already, and it's not. So that should tell you something.
Can you drop me a WAP? I mean, this is just
where you want me to drop the WAP.
This is the kind of thing you just gotta WAP out.
You gotta WAP this one, yeah.
It tricked us a couple weeks ago.
It did, yeah.
So I got in and got out, and then guess what? I'm back in.
You're back in.
I'm
Just
back in.
when I thought I was out,
Back
you
in.
pulled me back in.
That stick up that big stick with the upper shadow, it freaked me out. It scared me out of it.
This
I got
one?
out like in a day or two.
Well, you got to control your risk, and that was a clean, or I mean, that was just a nasty failed move right there.
And
I
this
have the
one,
downtrend line drawn, but
yeah.
before that, you would have drawn it like this.
Yes.
You would have seen this and be like, "Oh, it's breaking out, breaking the VWAP," and then of course,
Pat, that's such a great point. Leave that trend line and now draw the new one. This is why we talk so much shit about trend lines. This is what, no, now draw the old one.
No,
This is what
yeah.
trend lines do to you.
yeah,
Trend lines forced me, they didn't force me, but they really aided in me making some bad decisions early in my career. Because you draw one and it doesn't work, and you just draw a new one. It's
yeah.
so
You
good.
know how I do think of trend lines though? I think of them as almost like a momentum gauge, because you'll have a trend line break. That doesn't mean the uptrend's over, but it does kind of tell you that momentum might be slowing and that the rate of trend is, as our friend Ian likes to call it, is slowing, right?
Yeah, absolutely. The rate of trend. So look, it faked us out before. Maybe it actually goes. The point about this one is that for traders who can take on the risk and want that sort of risk reward, Pat, if this one works, just back to the pivot highs, how much money do I make? Right? So say you enter today 900 with a tight ass stop.
36%.
That happens in a day or two with a stock like this.
Yeah.
Right? So if this trade works in a week or two, you're up 35%.
Yeah.
If you can manage it tight enough, and that's why, like I said, I'm out in one day. I'm not trying to risk 10% on something like this.
Right. You could take
get
5% losses all day, or maybe not 5, but like 2-3% losses all day.
You want to get in when the train starts leaving, and get paid quick with stuff like this. This is super high beta. This is so on trend. This is we're gonna look back and talk about super micro 10 years from now. Like, you remember that crazy AI bull cycle? Remember what super micro?
I thought this thing was gonna be dead so many times last year. This was one of those examples where every time, sometimes even us technicians have to remind ourselves not to fight uptrends.
Yeah.
This is one of them for me.
They're making fun of me about the trend lines. Listen,
I know, I saw that, Rachel.
I have night terrors about trend lines.
Are the trend lines in the room with you right now, Steve?
I have trend line PTSD. All right, let's try to rip through a couple. HPE, Pat, that's a good one. HPE, we'll keep it tech. I'm trying to be selective, guys. Thanks for everybody in the chat. We will hit the Bitcoin miners next.
Ooh, cool.
Of course.
Yeah, some of these dinosaur tech companies, the hardware companies like Dell and HPE. Now HP, they split up, didn't they? They have an enterprise business and their like consumer PC business, right?
Yeah, this is cloud. Yep.
Oh, okay. So this is the cloud business. What's the other one? There's HPE and
HPQ.
HPQ. Yeah. Okay.
That's the hardware.
Yeah, not nearly as good as HPE here.
Man.
Yeah, broke out like a month ago. Broke out of like a 5-year base or something like that, 6-year base.
It looks like a cyclical stock. Remember that 2018 peak?
Yeah, it does. Wow.
Yep. Like Wells Fargo looks like this.
But at the same time, like, yeah, it's a tech company, but certainly doesn't trade with what we consider tech, right? It doesn't. To your point, I mean, it trades a lot more like a cyclical stock.
It looks like a laggard.
Yeah.
Based on what you're saying, right? Most tech stocks aren't just now breaking out of a multi-year base. I'm not saying that's a bad thing for this stock. There's probably a huge catch-up potential there. But go look at Nvidia or Microsoft or Apple, right? Maybe Apple's not a good example. But most of these stocks are more or less been going vertical for the past year now, not just breaking out of bases. But this one's fresh.
Yeah. I was going to say, I mean, you could buy a retest to that $20 level, but I don't think you're going to get it. I mean, it looks like it's trying to pull back these last few weeks, but just keeps getting bought. So if it's above 20 gets you to 26, 27. Yeah. I think that's totally doable from here. And that's a nice move. I mean, that's a 25% gain.
I would drop a VWAP from the high from a couple weeks ago. That's your entry. and then you trade it back, like Pat said, right to the 161. Yeah.
If that's your entry, yeah, you're getting long again here. Maybe you throw a stop at 2030 or so, maybe a few cents below, or even just throw it at 20 or 1999, whatever.
Okay, Patrick, I know that unlike me, you are not from the Bronx, but what do you know about Jennifer Lopez? Because
Jenny from the block. I know she's married to what's his name?
so we have the best YouTube username I've seen in the chat with us today.
What do we got?
Jenny from the bank.
Jenny from the bank. I
Jenny
love
from
it.
the bank. Love it. I love the JLo reference. Wants to know about Square. I think that's a stock I'm asking myself about a lot lately. It's on my list right here.
Asking about Square. Man, this thing has just been range bound.
It's sloppy,
It's sloppy for sure. Yeah.
but zoom in. Zoom in.
Yeah, this thing, but it does look like it on a breakout, it could really go. I mean, you've spent all this time in the range. You got to imagine if it does break out, it's going to really party. I would look for this VWAP as confirmation here, but I would want to see a breakout above 80, 86, 87. And then you get confirmation above 90. And so it obviously has a ton of work to do before it gets there. I mean, we're talking about like, yeah, 40% higher before you even get a breakout. But
Listen, you're talking to me about 30 points from now.
yeah,
If I know Jenny from the bank, she wants to get into this now. Okay?
she wants to get in now.
Yeah. So zoom into a daily. You have a failed top shaping up that can easily be traded back to the upper bounds of that range. No?
Yeah. And this is what he's talking about here. This topping pattern that probably isn't a topping pattern. Here, let me just
Low probability, cute trade. This is one of those trades where I look back, I'm like, why did you do that? Right? Because the primary trend is sideways, so it tends to be more unpredictable, right? Than something that's actually trending. However, this is clean.
Is this kind of what you're seeing, Steve?
Yeah. And if you're wrong, you what? You set it at the pivot lows and you lose a couple bucks?
Yeah.
I don't know.
Yeah. I mean, yeah, you throw a stop at that low from June.
Yeah.
Around 60.
Yeah.
And you just let that thing ride, maybe play it back to the former year-to-date highs around 86. That's a great trade right there. Yeah.
One hole, thank you. He says he took Goldman Sachs and JP Morgan today. All they talked about with J Power banks. I have to go back and listen to it. I had to miss it, but I will tune in later and see. When they put him on Capitol Hill in front of the congressman, it's typically like the worst dog and pony show. Because
I remember they used to do that to Janet Yellen. It's just a chance for these Congress people to
they're politicking.
understand or yeah, whatever. Like look good in front of their constituency. Like, oh look, I'm holding these Wall Street people accountable and all that. But
they're like, look, I understand finance. It's really pathetic. You deal with like all of these very long, like drawn out questions from the Congress people. And then poor Jerome Powell is up there just doing his own thing. And I will say, he's one of the better speakers of Fed chairs that I've ever seen in my life. I grew up with Alan Greenspan, right? So I get it. I understand the language. But Yellen was too much, Pat, because remember when she would speak, you didn't know what just happened. You thought she took a crazy pill after she answered a question.
yeah.
You're like, what? Powell's to the point. He's clear. He's concise. He's pretty good, and he gives it to him. He's funny. You remember?
My favorite was one of the Congress people was grilling. I think it was Yellen. It was either Yellen or Jerome Powell, and they kept on talking about Bernanke, and they couldn't pronounce his name. They were calling him Bernanke, and it's like here you are asking this question, trying to be tough, but like you shouldn't even be asking this question if like you have no idea what you're talking about. If you can't even pronounce the former Fed chair's name. You probably don't know what you're talking about. You probably shouldn't be asking about treasuries and things like that.
And the best Powell moment ever is when what was it, climate people?
Just close the fucking door. That was like at like a major low. I want to say that was at the October lows, wasn't it?
I don't know. Yeah, I think
it was a major low. I think
like October of last year. The correction.
Yeah.
Yeah, close the fucking. That was fantastic, Pat. It was just brought to my attention that we're missing an important meeting. So
Oh,
our analyst meeting is 6 minutes ago. So thank you,
oh,
everybody, as always, for joining. Thank you for being so active in the chat. You guys always bring the best requests. Pat, chart of the day. Chart of
chart
the
of
day.
the day, man. I think I used this one last time, but it's the one I have up, Jeffries. Well, I guess not for buying right now. I would probably say Goldman. But
Yeah.
this was it was a nice trade. We were in this one, but it's probably time to take profits. So yeah, I'd say Goldman.
Yeah, Goldman.
But that was yours. That was yours.
I'm gonna SMCI, right? I like it for a
SMCI.
trade. I'm in it. So obviously I'm biased. I'm talking my book, but I think we take a quick hit in this one. We take it for 50%.
Actually, you know what? I
SMCI.
think I'd agree with you there. I think you got a
SMCI.
good one.
All right. Thank you guys as always. We will be back in just 2 days, Thursday. Join us. Bring all your requests. We will talk about the Bitcoin miners then. I promise.
And Strazza will be in the hot seat that time
Yeah,
on Thursday.
no crypto today. That's rare. I'm proud of us. Maybe it's sentiment. I don't know. But thank you guys. We couldn't do this show without you. Join us on the morning show tomorrow. Special show, Straz's show. Pat is co-hosting. It's going to be a blast. And then join us in Chart Request Live at 1 o'clock on Thursday. And have a great week, everybody.
Awesome. Thanks.